Hey traders and investors, it's Serge Berger. One of the themes I've been discussing the entire year, starting in coming into January of 2015, and if you followed my videos throughout the year, you've been well aware of this. I've been calling for a pretty big and sharp correction in U.S. equities based on a whole bunch of things happening, not just on the charts, but just generally economic growth slowing, headwinds, inflationary pressure from the commodities space, troubles in China, the rising dollar, all those things. And then, of course, stuff within the equity market, equities having been the last asset class to see to not see any volatility after we've seen volatility everywhere else, from interest rates to commodities to currencies. So ultimately, the S&P 500 specifically was actually the last man standing. So just a few days ago, last week, of course, we finally had a big breakdown in U.S. equities, causing a lot of volatility. If you look at the VIX chart here, you can see the VIX. This is a multi-year weekly chart. Has spiked on Monday, spiked to 53 handle. Okay, a 53, so a print above 40 doesn't really happen a whole lot. And when that happens, it tends to mark the peak of fear. Doesn't mean we will necessarily have seen the lows in price for the S&P. In fact, I think we'll have a lower period. But actually, much more important to me is the signal that based on this factor and a bunch of other things we're going to quickly go through in a second, I think we have shifted into a new period, at least for a couple of months, where we're going to see heightened volatility. When you see a print in the VIX above 40, it's usually not over. It's not a 1 or 2 week event. It tends to be a multi-week, probably a multi-month event where you have heightened volatility for some time. So what you need is a plan to be able to manage through this period. In my course, the essence of active investing, I discuss how to navigate through those periods, what to do, both if you're an active investor and a long-term investor and a trader. So there's various things you can do here. You can start legging into things for the longer term. Either a strategy for that, your strategy of how to manage the volatility, how you can really take advantage of that. So have a look at my course, the essence of active investing. That you can see at the bottom. You can find it at the bottom in the comment box. There's a link to that. So you need a plan, and my job as a trader and investment manager is to obviously manage risk, but really it's also in the bigger sense to be really aware when we move into a new period. The past few years we've had a very simple, straightforward move higher in U.S. equities. But ultimately, that was going to come to an end, and it now has, at least for a couple months, come to an end. I think we need to now be aware of this, and we need to adjust to what's going on. So I'm going to just quickly go to the S&P 500 chart. That is a couple days old, but nonetheless, you see more or less what's going on. We've had the big break below the 200-day moving average. From a technical perspective, I could go through this for 2 hours for you guys right now. I'm not going to. But essentially, we've had a lot of breaks. The market is definitely broken here for some time, and you can see at the bottom the spike in volatility, which is just the VIX that I just showed you now in the daily chart, is very much coincides, obviously, with the big nasty drop. So if we look at the S&P now through a multi-year lens, and I've showed this chart before, this is the S&P 500. A multi-year going back to 2012. The support line is actually late 2011. This black support line is still holding, but this is the monthly chart. So I'm using the 17-month simple moving average, and you can see that is now at risk of breaking. The month isn't over yet, so by all means, it could be that we finish the month again above it, but the moving average is actually also flattening out for the first time in years. Okay, so there's actually a really good chance here that we finally snap this moving average and 2011 support line, which if you look at last October, for example, when we had that V-shaped reversal, neither was the moving average smoothing over, nor did it break below the moving average price, and it also didn't break below the 2011 support line. None of this happened at the end of the month, right? So that's extremely important. So we're in a more volatile period now. It's extremely important that we have the right tools to navigate through this and profit from it, both as an active investor, trader, and a long-term investor. So have a look at the Active Investing online course. Let me know how you do. Any questions, please let me know. Please like the video, subscribe to the channel, and I'll see you in the next video.